What is happening in the markets? Get ready, because the news cycle is absolutely electric today, and you are not going to want to miss a single second of this action. We've got seismic shifts, critical levels being tested, and bold moves from major players that could redefine the entire landscape. This is Bitcoin Bulletin, and we're diving headfirst into the stories that matter most right now. Stick around, because you're about to get the unmissable updates you've been waiting for. Let's go. First up, we're talking about Bitcoin's price action and whether it can hold those crucial support levels. The market is watching closely to see if $107,000 will remain a solid foundation or if we're headed for a significant correction. Next, we're diving into the growing trend of institutional adoption and the powerful argument for Bitcoin as a scarcity-driven investment. This isn't just about holding digital assets. It's about a fundamental shift in how major corporations are viewing their treasury strategies and why this move could be a game changer for the entire ecosystem. Then, we've got a fascinating development from El Salvador. The nation is making a significant strategic move with its Bitcoin reserves, splitting them into new addresses. We'll explore the reasons behind this decision, including the intriguing mention of quantum threats and what it means for national digital asset security. And finally, we're looking at the bold accumulation strategies of key figures like Michael Saylor. His company's continued commitment to Bitcoin signals a potential paradigm shift in corporate treasury management. These are the stories that shape our future, so make sure you're locked in. Don't forget to smash that like button, subscribe if you haven't already, and ring that notification bell so you never miss an update. We'll see you in the next segment. Bitcoin's price under pressure. Can $107K hold the line? Bitcoin is currently navigating a critical juncture, with its price hovering near $108,500. The market is intensely focused on whether this level can hold as a key support, with resistance eyed at $117,000. The stability of the $107,000 mark is seen as a pivotal indicator for Bitcoin's immediate future direction. A sustained close above $107,303 could potentially propel Bitcoin towards the $110,000 mark, a scenario that analysts are closely watching. However, the technical indicators present a mixed picture. The Relative Strength Index, RSI, shows bearish divergence, suggesting a weakening in buying momentum, which could signal increased risk. Some analysts believe that a dip below $107,000 could trigger a more significant correction, potentially testing the $100,000 level. This $100,000 mark is particularly significant as it aligns with Bitcoin's 200-day moving average and has historically attracted considerable buying interest, potentially acting as a strong floor. Conversely, breaking the $117,000 resistance level could ignite a new rally, aiming for the $123,000 mark. The broader market sentiment is currently characterized by uncertainty. This is partly fueled by recent outflows from Bitcoin ETFs and reports of large institutional investors liquidating their positions. Since reaching a peak of over $124,000 in early August, Bitcoin has experienced a decline of approximately 12%. This pullback has led to discussions about the possibility of a bull trap, where an asset experiences a temporary rally before a sharp reversal. The market is actively debating whether this correction is a short-term fluctuation or the beginning of a more sustained bearish trend. Amidst this volatility, there's a growing interest in alternative cryptocurrencies that offer tangible real-world utility. Projects like Remitix, currently trading at 10 cents, are gaining attention. Remitix aims to bridge traditional finance with blockchain payments and has successfully raised over $23 million. It has secured listings on exchanges such as Bitmart and LBANK, and its platform facilitates instant crypto-to-bank transfers in over 30 countries. The project is also preparing for a beta wallet launch and a community giveaway. Analysts are pointing to such projects as potential high-return investments due to their early-stage development and lower market capitalization, suggesting a potential for significant growth as investor focus shifts from pure speculation to utility. But is the biggest story about Bitcoin's price or something else entirely? Stay tuned as we explore the major shifts in how institutions are viewing this digital asset. Bitcoin's institutional ascent, a scarcity-driven imperative for corporate treasuries. The narrative surrounding Bitcoin is increasingly shifting from that of a speculative digital asset to a fundamental component of institutional investment strategies. This evolution is deeply rooted in the inherent scarcity of Bitcoin, a characteristic that positions it as a compelling store of value and a potential hedge against inflation, much like digital gold. As more corporations begin to explore and adopt Bitcoin as part of their treasury management, it signifies a profound paradigm shift in how financial assets are perceived and managed at the highest corporate levels. This trend is not merely about diversification. It's about recognizing Bitcoin's unique properties in a rapidly changing global economic landscape. The strategic case for Bitcoin as a corporate treasury asset is built upon several key pillars. Firstly, its fixed and predictable supply, capped at 21 million coins, stands in stark contrast to the inflationary policies often pursued by central banks. This scarcity provides a degree of certainty and predictability that is highly attractive to treasurers tasked with preserving and growing corporate capital. Secondly, Bitcoin's decentralized nature and its robust, immutable ledger offer a level of security and transparency that traditional financial instruments often lack. While volatility remains a concern, many institutional investors are developing sophisticated strategies to manage this risk, viewing short-term price fluctuations as secondary to Bitcoin's long-term value proposition. Figures like Michael Saylor, CEO of MicroStrategy, have been at the forefront of this movement, advocating passionately for Bitcoin's adoption as a primary treasury reserve asset. MicroStrategy's aggressive accumulation of Bitcoin, often financed through debt, serves as a high-profile example of this strategic commitment. Saylor's thesis posits that holding Bitcoin is a more prudent financial decision than holding fiat currency, which is subject to devaluation. This conviction is influencing other corporate leaders and boards, prompting them to conduct their own due diligence and consider similar strategies. The ongoing accumulation by such prominent entities signals a growing institutional acceptance and validates Bitcoin's potential as a legitimate financial instrument. The institutionalization of Bitcoin also brings enhanced liquidity and market maturity. As more institutional capital flows into the market, trading volumes increase and price discovery becomes more efficient. This can lead to reduced volatility over time and greater confidence among a wider range of investors. Furthermore, the development of regulated financial products, such as Bitcoin ETFs, has made it easier for institutional investors to gain exposure to Bitcoin through familiar investment vehicles, further accelerating adoption. The narrative is no longer about whether Bitcoin is a viable asset, but rather how best to integrate it into robust financial frameworks. While institutions are embracing Bitcoin's scarcity, a small nation is making strategic moves with its own reserves. Get ready to hear why El Salvador is splitting up its Bitcoin. El Salvador's Bitcoin shuffle, quantum security and strategic redeployment. El Salvador, a nation that famously adopted Bitcoin as legal tender, is now undertaking a significant strategic maneuver with its national Bitcoin reserves. The country's National Bitcoin Office announced that it has moved its substantial Bitcoin holdings from a single address into multiple new, unused addresses. This move is described as a crucial initiative aimed at enhancing the security and long-term custody of the nation's strategic Bitcoin reserve. While the full implications are still unfolding, the primary stated motivation behind this redistribution is the looming threat posed by quantum computing. The office articulated concerns regarding the potential capabilities of quantum computers, specifically referencing Shor's algorithm, which theoretically could break the public-private key cryptography that underpins Bitcoin's security. The process of signing and broadcasting a Bitcoin transaction makes the public key visible on the blockchain. This visibility, according to the office, could potentially expose the address to quantum attacks, allowing adversaries to discover private keys and redirect funds before a transaction is confirmed. By splitting the reserves into smaller amounts, each holding up to 500 BTC, El Salvador aims to minimize the impact of any potential quantum attack, as an unused Bitcoin address with hashed public keys remains protected until funds are spent. This action comes at an interesting time, following reports in July that El Salvador would cease its daily Bitcoin purchases, a statement made in relation to the International Monetary Fund, IMF. The IMF had previously linked the disbursement of a loan to El Salvador's commitment to adjusting its Bitcoin policies. However, El Salvador's government has maintained that it continues its policy of buying 1 BTC per day. The redistribution of funds into multiple addresses is also framed as an enhancement of transparency, with the government now operating a public dashboard that displays its transactions and addresses. This contrasts with the previous practice of using a single address, which, while transparent, presented a more concentrated target. Currently, El Salvador holds approximately 6,286 BTC, valued at around $686 million at current market prices. Privacy experts in the crypto space often advise against consolidating large amounts of digital assets into a single address, reinforcing El Salvador's current strategy as a move aligned with best practices for digital asset security. The nation's journey with Bitcoin, initiated in 2021 when it became legal tender alongside the US dollar, has been closely watched, often drawing criticism from international financial institutions. Despite the mixed public reception and ongoing debate about its economic impact, President Nayib Bukele remains a popular figure, largely due to his policies on public safety. As El Salvador fortifies its digital assets against future threats, another trend is solidifying Bitcoin's role in traditional finance. We'll break down the strategic case for Bitcoin as a corporate treasury asset next. Saylor's strategy: Bitcoin accumulation signals corporate treasury paradigm shift. Michael Saylor, the influential CEO of MicroStrategy, continues to champion a bold vision for Bitcoin as a primary corporate treasury asset. His company's aggressive and sustained accumulation of Bitcoin serves as a powerful signal of a potential paradigm shift in how businesses manage their capital and view long-term value preservation. Saylor's conviction is rooted in the belief that Bitcoin, with its inherent scarcity and digital nature, represents a superior store of value compared to traditional fiat currencies, which are susceptible to inflation and devaluation. This perspective is increasingly influencing strategic financial planning within the corporate world. The core of Saylor's argument rests on Bitcoin's unique economic properties. Its capped supply of 21 million coins ensures a predictable and disinflationary future, a stark contrast to the expansive monetary policies often employed by central banks globally. This predictable scarcity makes Bitcoin an attractive asset for companies seeking to protect their purchasing power over the long term. Furthermore, Bitcoin's decentralized and immutable blockchain technology offers a robust framework for secure asset ownership, reducing counterparty risk and providing a high degree of transparency. MicroStrategy's strategy involves leveraging its balance sheet to acquire Bitcoin, often utilizing convertible debt offerings to fund these purchases. This approach, while carrying inherent risks associated with leverage and market volatility, demonstrates a deep-seated confidence in Bitcoin's future appreciation. The company's consistent reporting of its growing Bitcoin holdings and Saylor's vocal advocacy have undoubtedly played a significant role in educating and persuading other corporate leaders to consider similar strategies. The narrative is shifting from Bitcoin as a speculative venture to a strategic financial tool. The implications of this trend extend beyond individual corporate balance sheets. Widespread adoption of Bitcoin as a corporate treasury asset could lead to increased market liquidity, greater price stability, and enhanced institutional acceptance of digital assets. As more companies integrate Bitcoin into their financial strategies, it not only validates the asset class, but also contributes to the maturation of the broader cryptocurrency ecosystem. This institutional embrace is crucial for Bitcoin's long-term viability and its potential to become a globally recognized reserve asset. Analysts are closely monitoring these developments, with many viewing Saylor's persistent accumulation as a leading indicator of broader institutional adoption. The success of MicroStrategy's strategy could encourage other publicly traded companies to follow suit, further solidifying Bitcoin's position in the global financial architecture. This strategic accumulation by key figures and entities is a testament to the evolving perception of Bitcoin's role in modern finance. We've covered Bitcoin's price, institutional strategy, and national security moves. What's the takeaway from all this action? Stick around for our rapid-fire recap and your essential calls to action. And that's a wrap on today's critical updates. We saw Bitcoin facing key support levels, a deep dive into Bitcoin's institutional adoption as a scarcity asset, El Salvador's strategic move to protect its reserves with quantum security in mind, and the ongoing paradigm shift driven by corporate accumulation strategies. Don't miss out on any future developments. Make sure you're subscribed, hit that like button, and turn on notifications by ringing the bell. Follow us on all our social platforms for more insights and join the conversation in the comments below. Thanks for watching Bitcoin Bulletin. Stay informed, stay ahead.